Good morning and welcome to Business Daily right here on Trust Television. I am Yusuf Akogo. Let's take our top stories now. Glad to have you back. Before we go into the stock market analysis and updates, let's give you the prices of commodity as they are currently in Nigeria. Of course, the prices are varies from state to state. If you see in Abuja, the price of rice range between 35,000 to 45,000 naira, depending on your location. If you go to Lagos, same price as well. If you go down to Jos, North Central Nigeria, the price is a little bit lower, between 32,000 and of course 42,000 naira, depending on the quality you're buying. Down to Ilori in Kwara State, same North Central, 30,000 and 40,000 naira respectively. In Ibadan, Southwest Nigeria, is range between 35,000 and 45,000, same as what we have in Lagos. Seems that some of the big cities are actually, paying same amount for the rice. Of course, down to Port Harcourt, it's even increased, it's higher, 36,500 and of course 46,500 respectively. If you go down to Lagos, 25 kg, it's around 17,000, between 17,000 and 23,000. And of course, down there in Sokoto State, Northwest Nigeria, 25 kg is around 15,000 and of course 20,000 respectively. While 100 kg bag in Sokoto is even more expensive, between 60,000 and of course 70,000 naira respectively. Down, look at the cost of beans in a drum. That's 50 kg bags in Lagos. It's about 30 to 38,000 naira. In Borno, 27 to 35,000 naira, and of course 60,000 naira. Depends on which market you're actually buying from. 50 kg is around 22,500 to 30,000. And of course, if you go down to the 100 bags, 100 kg, that is a bag, is about 44,000, between 44,000 and 60,000 naira. And if you go down to My 12 market in Lagos, one of the very popular markets in Lagos, 100 bag is about 36,000 naira. That is talking about white beans now. And if you go to Bodija market in Oyo State, it's same price there. And you go to Daunu market in Kano, it's around 35,000. Same in Daunu market, one tier there is 560 naira. That is what we call Mudu here in Abuja. Then if you come to Igbudu market, that is in Delta State, it's about 36,000 naira. And of course, a paint in Igbudu market is about 1,000 naira. Go down to Gombe market down there in the northeastern Nigeria, is about 36,000 naira for 100 kg of white beans. That is if you look at it again, a mudu there is about 250 naira. That's relatively very, very cheap. You go down to Umahia main market, that is in the southeastern part of Nigeria. 100 kg bag is 35,700 naira. And a paint there, one paint rubber is 1,050 naira. Why 50 kg bag in Ibadan is 40,000 and 45,000 naira. Why 50 kg bag in Meduguri, Borno State is between 28,000 and of course 42,500 naira. Why Oloyi, the one they call honey beans, 100 kg bag is about 75,000, between 75,000 and 90,000. naira down there in Maiduguri, Borno State. Well, these are the prices of the commodity as we have from some selected states in Nigeria. We'll be giving you updates on this, and of course, whatever changes that we experience every day, so that you will be able to know how to plan and indeed make your choice. It's a time of decision for Nigeria. We will keep you updated and see how we can actually help you right here. But right now, we move now to the stock market and see how the data look like on, of course, Tuesday. The market closed positive there, 0.16%. The all-share index added about $80 billion to close at 32.2 trillion naira, and a volume 588.855 volume of traded exchange hands among investors, and the value 8.960 billion naira there. And in terms of deals, 8,272 deals exchange hands among investors on the day. We look at the gainers for the day. Now we have the like of Sky Aviation. Sky Aviation gain 7 naira 70 kobo to close at 10%. Of course, if you look at the Academy Press in the printing sector, the education sector rather, 1.98 1 naira 98 kobo it gained to close positive at, of course, 10%. Shams also gaining 44 kobo there to close at 10%. Indeed, good performance from them there. We look at the losers for the day. Of course, CI losing 4 naira and 5 kobo to close downward there at, of course, 10%. Cornerstone Insurance 1 naira and 1 kobo there it lost to close at 9.82%. And of course, NSL Tech also gaining 42 kobo to close downward there, 8.76%. On the activity chart, we have the likes of course, United Bank for Africa, UBA, 78.5 million volume of shares it traded, while Guaranty Trust Bank also trading 65.4 million volume of shares, and of course Transcorp Nigeria trading 33.7 million volume of shares on the day. That's on Tuesday. We'll look at the sector in terms of performance across sectors. It's all positive. The banking sector there gaining 0.02%, and of course the industrial sector 0.10% as well, while consumer goods sector also gaining 0.06%, and the oil and gas 1.41%, and of course insurance sector 1.85%. It was all green on Tuesday. We hope that momentum will be sustained at the close of business today. Of course, we look at the rest of Africa. We see that Mauritius Stock Exchange closed downward there, 0.08%. The Ox share index there way below 2,000 basis points, 1,084.68 points there. While Morocco Stock Exchange down there in the Northern Africa, the Ox share index there losing maybe flat, let's say, so to say, 11,704.88 basis points to close flat, though on the negative side there downward. Then the GSE in Ghana, that is next door neighbor in Nigeria, next door neighbor to Nigeria, one of the leading stock markets in West Africa, the Ox share index there maintained some reasonable basis point there, 2,703.03 basis point to close positive at 0.12%. Interesting development you see across marketing counters there. We'll take a quick break now. When we come back from the break, we'll go into our discussion for the day. Don't go away. Glad to have you back. It's the Business Daily right here on Trust Television. Now we are going into our discussion for today. We are looking at again the value of Naira. How has it fared since the exchange rate unification policy took off? So today I have joining me in the studio Joseph Ango, is a policy analyst, and he joined me here to dissect what has been happening in the foreign exchange market. Glad to have you, Mr. Joseph.
Thank you for having me.
Yes, the Naira gained about 1.79 yesterday at the official market, though there seems to be a convergence now of the official rate and of course that of the black market rate. Yeah. Do you think the policy has achieved it?
Of course.
Or it's too early to say?
No, the original aim of the policy was to achieve convergence, and we saw that yesterday. So the question is whether we're going to see a spike in foreign exchange rates or going to see a slowdown and gradual descent. But the original policy aim of the statement by the new leadership of the CBN, and of course, echoing the sentiments of the current government, was to achieve convergence, and we saw that yesterday.
Do you think this can be sustained in the long run?
Of course, this from my own angle, we're going to see a spike because we're already seeing a devaluation of the currency. You understand that, like what we had with...
is it devaluation, or is the market force that is actually affecting the value?
I mean, you can look at it from different angles, but what we have seen over since this policy statement kicked in, what we have seen is a devaluation. Of course, ironically, I mean, I remember some weeks ago I went with some dollars to get some Naira at the black markets, and I got it at 756. So there's already a convergence, and it's not necessarily a bad thing. It should be a spur for the Nigerian government to look at internal production, productivity generally. I know China, for example, as a matter of fact, China was accused by the United States government for so many years of engaging in currency manipulation because the Chinese government had a policy of just keeping
retaining the value of their currency.
The currency weak compared to the dollar. And that was what a lot of investors, I mean, we're talking about the likes of Apple, American companies going into China to produce rather than produce at home. But of course, currency devaluation is one thing. Nigeria would have to also look at China and prioritize investments in education, healthcare, infrastructure. We're talking about transportation, light, and of course, security. So if we can handle all of these issues together with a devalued currency, Nigeria would very rapidly become Africa's world power.
Interesting there. But why Naira is losing, so to say, some other European currencies, the pounds, the euros, are in a way becoming stronger? Is it the policy aim at targeting just the Naira alone, or perhaps it's just a coincidence?
You know, the Naira or the local currency is one way of looking at the general temperature of the economy. And if you see a local currency gaining or becoming stronger, it is because there is much more going out of that economy than coming in. And if you see local currency weakening, it's the reverse. So if you look at the old, because whether we like it or not, what we had with the old CBN policy was the government providing subsidies, you know, like, but that whole arrangement was fraught with corruption. There was a lot of racketeering. Echoing the sentiments, these sentiments, remember the statement by the former emir of Kano, where he said, because of this policy, some people became overnight billionaires, multi-millionaires. We saw corpers becoming multi-billionaires, we saw Richard Castellers becoming multi-millionaires. So it was a policy that benefited parts of the economy that were not productive. So these people were not engaging in any productive venture. They were just getting currencies at dollars at the dollar at official rates and engaging in round tripping or and all sorts. So it wasn't foreign currency going into getting inputs for manufacturing or getting inputs to maybe into agriculture and so on and so forth. It was just a system that a lot of politically exposed persons used to grow their wealth.
Indeed. As a build-up to this exchange rate unification, the CBN also directed bank to lift restriction on domiciliary accounts. I think that was on Monday or thereabout. But I had a conversation with some bankers, and many of them were not too happy with that decision. According to what they told me, if you are lifting restriction on domiciliary account, it's going to have a ripple effect on the exchange rate unification. What will you say to that? Because people will prefer to now come in because they have free access to their dollars. They may probably want to keep more dollars.
Of course, the concerns of the average banker is germane. Of course, you're going to speak representing their sector, because what this policy will do, lifting up that restriction on withdrawals from domiciliary accounts, is that it's going to free up funds for the owners of these domiciliary accounts, and that is going to affect bank liquidity. So the banks are not going to have enough or as much foreign currencies to really play with or trade with or, profit from. So that's a germane concern from, of course,
but do you think that will make dollars more available?
Of course, it's going to make dollars much more available, because you're going to have people, whether we like it or not, the idea is to really make the field investor friendly. For example, I'm a businessman. I'm just using, for example, I get some monies deposited in my domiciliary account, for example, and you tell me that there's a restriction, and I have some work that I'm doing, in Nigeria, and I need much more than what the restriction would allow. That's already a bottleneck for the average investor. So, of course, there are so many angles to look at this.
Exactly. That's where I actually want to come in there, because I'm looking at it. If you say owners of domiciliary accounts can withdraw $10,000 a day, that is a huge amount of money. Taking $10,000 from your account every day, for example, if you're a business person. I try to compare Nigerian economy with the rest of the world, whereby no matter how much you earn, even if you're earning $500,000 or pounds, you can't move around with cash just like we do here in Nigeria. So giving that access, don't you think it's going to affect our economy as well?
It's not going to affect the economy, so long as the money is still going to flow and there's going to be much liquidity within the system. We should look at these potentially engendering investor confidence and also catalyzing productivity within the local economy. So, for example, if the investor gets that 10,000 USD per day and puts it into a productive venture.
If you are a holder of a domiciliary account, so you can take $10,000 from your account. It was not specific. The CBN did not specify those which you assess the fund.
No, I'm just saying an investor can be anybody.
Okay.
People can become investors. So if you take that, you put it into a productive venture, we're looking at potential employment, we're looking at potential growth in the local economy. So, the banker's point of view is very well taken, but the economy has suffered for a very long time because of these multiple exchange rates. Okay. So let's see how the economy will do with the unified rate.
Okay, or do you also think that there's illiquidity in the economy as well? Or it depends on where our priority lies. Are we focusing on having more Naira in the economy or having more dollars or foreign currency? And by the way, dollar is not illegal tender in Nigeria anyway.
It's not illegal tender, but we have seen, it was some time ago, I was here discussing about the dollarization of the Nigerian economy. Even though it's not legal tender, but we still see a lot of people transacting and doing business in dollars and pounds and euros, particularly the dollar. So it's not legal tender, but again, it is very good policy. You know, the genius of leadership is not knowing what. The genius of leadership is knowing how. So it's a very brilliant policy, like policies that have come before now. But the question is, will the leadership get into pit holes, or will politics get in the way of sound economic principles?
Interesting there. Talking about dollar being more, I mean, the demand is even more in Nigeria than even the America where the money originated from. But don't you think that there should be a way whereby we can actually restrict the use of some of this currency in Nigeria, so as to pave way for Naira to, have more value, as it were?
The most sustainable way of discouraging people from housing their funds in dollars, for example, is if the economy is productive. So if the economy is attractive to foreign investors, foreign investors, regardless of whatever part of the world they come from, you see them exchanging their local currency, which is, when you look at it from a foreign currency, so that they can get the Naira and do business in Nigeria. The problem is that the local economy has, in so many ways, has not been very attractive to foreign investors. We see manufacturing failing. We see even small and medium scale businesses failing. Look at the report of, you compare since 2015, for example, the amount of foreign direct investments that has come into Nigeria, there's been a gradual descent. So productivity, again, is where the government needs to focus on. You can send police, EFCC, DSS to go after people to discourage them from keeping monies, foreign currencies. But, people are traveling every day. There's still Japa syndrome going on. A lot of people need foreign exchange so that they can travel, maybe school, work, relocate, or treat themselves abroad. So there is that huge demand for the dollar, for example. If the hospitals, working hospitals, people will not want to get as much dollar to travel out for medical tourism.
Exactly.
If the school system is working, people will not travel out for foreign education, requiring dollar. If the economy was attractive, people will not relocate, seeking for greener pastures and taking dollars with them, at the expense of the local currency.
Maybe we should use like 1 or 2 minutes now to talk to our leaders. Our leaders are known for traveling abroad for medical checkup, just like you rightly mentioned. Sending their children abroad to study and things like that. But have we forgotten that economy we're actually going to explore, going to enjoy, were built by human beings like us? Is it difficult for us to replicate what we see abroad down here in Nigeria?
It's not difficult at all.
Isn't it? Is it not embarrassing that you run from your country every day to go and access medical facilities elsewhere?
It's not embarrassing, but some people are running away from dying. The stories in the hospitals is not.
But those that are going are not like me and you. They are those who are in the position of authority. Who has the power to put these facilities in place?
Of course, they have the power to put these facilities in place. But again, we can learn from China. Devalued currency is not a big problem. It's very good if we are an exporter driven economy. But we'll not get to that place until we fix power, we fix our weak and very sparse infrastructure, we fix education, for example, so that we can produce skilled labor We fix healthcare so that we don't lose high caliber human resource to untimely death. We also make the general environment in terms of security, in terms of the rule of law, very attractive for foreign investors and Nigerians that have for so many decades left this country so that they can come back and invest. I'll give you an example. There was this professor in Princeton University. He's Chinese. I mean, during the bad days in China, his family fled. So he was practically born and brought up in Princeton University. No, in the US. So he went because he became a professor in Princeton University. So when China was setting up, now this was as a documentary. When China was setting up, the Chinese government approached that Princeton professor and told him, how much are you getting in endowment from this university? We're going to multiply it. Yeah. They also gave him a laboratory that's the size is 4 times a football field. Right. And on top of that, they gave him almost unlimited access to graduates from the university. So incentives like this, together with general working local economy, will leave us talking about whether people are keeping dollars or
absolutely. Mr. Joseph, I must thank you for your time. There is quite a lot to talk about, but time is always not our friend. I think we need to learn quite a whole lot from China and probably borrow some of their policies and see how it will help our economy. Thank you, Joseph Ango, policy analyst, for your time on Business Daily.
Thank you for
appreciate it. So with that is a wrap on the show today. Join us tomorrow for more. I am Yusuf Akogu.